Hello and welcome to a new episode of Merrill's Monday Morning Market Madness. Coming at you today with some updates regarding the Phoenix area housing market. And in today's episode, we're going to be specifically discussing the November numbers. Just a couple days into December, so I wanted to kind of talk to you about what the market did in November and how it has compared to previous Novembers, to give you an idea of kind of where our supply and demand levels are at. So as always, I like to start with our month supply of inventory number. So active on the market in our MLS right now is 7,117 listings, pending 11,499. 8,212 listings have sold in the past 30 days, giving us a month supply of inventory of 0.87, which is actually a little lower than we have been at on a lot of Mondays recently. We were in the low 0.9 range, 0.92, 0.94. Inventory has started declining over the past month. So, the normal trend of a normal market, which we really haven't been in a normal market in the Phoenix area for many, many years now. At least, I'm in 2000. The last normal market that I would consider would be like maybe 2003 to 2004, a relatively balanced market where home values are not skyrocketing or plummeting. Like we've been in a very strong seller's market pretty much since 2011. And then, 2000, obviously, late 2007 to 2010 was, the Great Recession, and that was very much a collapsing market. So we haven't really seen a nice, balanced, stable, steady market in quite some time. But a balanced market we would expect to see month supply of inventory of somewhere around 4 or 5. And right now we're at 0.87. So still extremely strong seller's market at the moment. But anyway, the point I was getting ready to make about the inventory. So I look every single day at how many active listings we have in our MLS, and I record it on a little sheet. And basically, the spring is always the very, very busy selling season. So, March, April, May, June, the market's usually very crazy. And then by July, it starts to slow down. And we have seen that this year. July, August, September, October, those sales months were a little slower than May and June. And inventory has been increasing. Sellers have seen how much equity they have. At our low point, we only had 4,000 active listings. And at some point in like late October or early November, we actually hit over 8,000 active listings. So we doubled the number of homes for sale over a couple of month period. And now it has started to decline again. And we're back down to around 7,000 active listings. The reason I'm telling you all of this, and the reason why it's important, is because this time last year, so we know average home prices have increased by over 20% this year. At this time last year, we had 2,000 more listings available than we have now. And inventory is already declining in November and December. That's kind of a news that we're already seeing declining inventory in the slowest months of the year, and we're getting ready to head into the spring with an even more dire inventory situation than we had last year. So don't expect home values to fall anytime soon. We still have extremely high demand and desperately low supply. And I believe that is going to cause another very, very hot seller's market throughout 2022. Rates remain low. That's a huge important factor. That's the one thing that I think could have a slowdown on the market. I don't even want to call it a reversal. Like if rates rose to 5%, 4.5%, something like that, then the market might really balance out. Affordability would become even a bigger concern than it is right now, and it would really affect people's buying decisions. But right with rates in the threes, it makes everything really, really affordable, and that is causing people to continue to buy and push prices. So in the month of November, We saw 8,970 closings, which is a meteoric stat for a November. That is just a lot of homes to close in November. To give you an idea, October, so the month before, saw 8,765. So we actually closed more homes in November with the Thanksgiving holiday and everything, more homes closed in November than what closed in October. That alone should be a sign to people be like, oh, the buyer demand is still very, very strong. If we were selling that many homes in November, the total volume, I mean, that's just an interesting fun stat. Total volume of those almost 9,000 homes was 4.6 billion. And the average sales price, I literally just took every single house that closed. I didn't, narrow it down by area or by type of residence or anything. This is manufactured homes on leased land and mansions. Just the average price of everything was $512,600 with an average days on market of 32 days. In November of 2020, so, November a year ago, the average 9,176 homes closed. So November 2021 saw 200 fewer home sales than November of 2020. But what you have to know about November 2020 is, well, A, homes were $100,000 less. I'm going to go over that number in a second. So affordability was better. B, the sales cycle of 2020 got really, really messed up. May and April and May were actually very slow months because COVID had just come out and people weren't sure whether they could leave their houses. And so everything got moved back. So instead of, May and June being our busiest months, we did see like a historically insane fall. But listen to the previous Novembers. November of 2019, only 7,100 closings. 2018, 6,600. 2017, 7,200. The year before that was 6,800. The year before that was 5,350. Year before that, 4,985. These were all hot seller markets, by the way. This is not like this was a slow market. 2014, home prices were rising in 2014. November only saw 4,985 closings. 2013 was 5,100. 2012 was 6,808. So if you just take the average of the past 10 years, including this year and last year, which were insanely high, the average November is only 6,831. So we exceeded the average November by more than 2,000 homes in November of 2021. With declining inventory, with the prices, the biggest objection that I hear about whether it feels like the market is topping out is that, this affordability. 9,000 people still bought properties in November alone of 2021, and that's 2,000 more than just a normal November. So, the affordability doesn't seem to be having a dramatic slowdown on the demand so far. In fact, if anything, demand is higher, significantly higher than normal. And so anyway, going back to November 2020, as I mentioned, 9,176 homes closed in November of 2020. And the average sales price of those homes in November of 2020 was $419,000. So again, November 2021 was $512,000. So we saw an increase in the average sales price from November to November of 22.2%. So, just kind of average it out. Typically, homes are gaining on average 2% a month in equity. So if you own an average $500,000 house, the value of your home is going up on average $10,000 a month. Of course, it's not a straight line, right? There are the home values tend to go up a lot more in the spring and tend to remain a little more stable in the fall and the winter. But that's the other thing that's kind of interesting is that we're still seeing home values, average sales prices increasing in the months of October, November, and projected for December, another increase in average sales prices, which are, during our slowest months of the year, prices are still rising and demand is still extremely high. So I have in the past been saying, we over the past 12 months, we've seen average sales prices increase by 22%. I have been saying for several months now that I think 2022 is not going to see that dramatic. We're probably not going to go up 22% because of the fact that home prices are much higher. We've got a higher average to start from in the first place. And, affordability will continue to become a bigger and bigger factor, but not enough to where the seller's market is suddenly going to reverse and home values are going to plummet. I have been predicting for several several months that prices will increase in 2022 by 10 to 15% on average. I'm now leaning every day, I'm leaning more heavily towards the 15% number. We'll see what happens. Of course, no one has a crystal ball, but supply is more desperate now than it was a year ago. And demand is pretty much exactly where it was at a year ago. Demand has not slowed down despite the increase in sales prices by almost $100,000. So anyway, I hope you found this information helpful. If you have any questions about the market, or you want to know more specifically what the average prices are doing in your neighborhood, or you want to know what the value of your home is, I'd be more than happy to run those numbers for you. And as always, thank you so much for watching. Hope you all have a great holiday season and a happy new year.